Welcome to the Deep Dive. We take your sources, cut through the noise, and give you the key insights fast. Today, we are plunging into KULR Technology Group, Inc. And wow, this company seems to be living a double life.
That's a good way to put it, yeah.
Yeah.
On one hand, you've got this amazing deep tech business, stuff that's literally proven by NASA.
Yeah.
And then on the other hand, they've made this really aggressive pivot. They're calling themselves a Bitcoin-first company.
Which just raises this huge question for you, our listener. Is KULR finding some kind of revolutionary synergy here, between space age, tech, and crypto? Or have they maybe just jumped onto a highly speculative path that could put their whole original business at risk?
Well, we're going to try and figure that out. We've pulled together a pretty comprehensive analysis using publicly available info, current as of July 25th, 2025. We'll cover their business, the management, financials, strategy, really try and get a handle on their value and where they might be headed.
Okay, sounds good. Let's unpack this and dive into those sources you shared. And hey, before we really get going, remember you can like and subscribe to the Stock Analytic AI YouTube channel. We do a lot more deep dives there.
Yeah, and members get priority access. We're tackling the S&P 500 over the next few months, so members hear that first.
Definitely worth checking out. And if you just want a one-off deep dive on a specific stock, drop us a super thanks.
Okay, let's start at the beginning. The foundation of KULR. What is our core business?
Chapter 1, Business Analysis. Okay, so KULR Technology Group. It's genuinely complex, and it's definitely evolving. They started out, as a high-tech supplier focused on energy management systems.
Right, the thermal stuff.
Exactly. But now they've done this dramatic pivot, declaring themselves Bitcoin first. So you've got this dual identity, one foot firmly planted in their proprietary thermal management tech, the other stepping deep into digital asset accumulation.
So how does a company with that kind of split actually make money? Well, they've got three main ways right now. The first is product sales. That's their physical stuff, the thermal management and battery safety products. Think the thermal runaway shield, or TRS, that's used on the International Space Station.
Wow.
And their safe case solutions for lithium-ion batteries. Then there's contract services. This is high-value engineering, design work, simulation, testing for really elite clients. NASA, the Department of Defense, folks like that.
Gotcha. High-end services.
And the third one is totally new, Bitcoin mining. They just started that revenue stream in the first quarter of 2025, directly linked to that whole digital asset focus.
Okay, 3 streams. What does the mix look like? Does it tell us anything?
Oh, it tells us a lot.
Yeah.
It's pretty volatile. So in 2024, get this, their product sales actually decreased by 47%, down to $3.6 million.
Ouch. Almost halved.
Yeah, but contract services grew 51% up to $4.4 million. And they added a new IP licensing stream that brought in about $2.7 million.
Okay, so mixed bag in 24. What about more recently?
Then Q1 2025 hits, and product revenue suddenly surges, up 89% year over year, but service revenue declined 8%. And like I said, they booked their first Bitcoin mining money, but $250,000.
So wild swings. What does that suggest, especially that big 2024 product drop?
Well, it really hints at challenges, right? Challenges in commercializing those physical products at any kind of scale. It seems the Bitcoin pivot might be, a strategic move, maybe to generate faster returns, grab investor attention. Perhaps it's even an admission that the path to profit for their core tech business is just really slow.
Trying to find a faster route to value, maybe. Can you give us a bit more detail on their actual products and services, this energy management platform?
Sure. It breaks down into about 3 core areas. First, thermal management and battery safety. That's their bread and butter. Besides the TRS and SafeCase, they have FTI materials, fiber thermal interface, and PCM heat sinks phase change materials.
Okay, managing heat.
Right. Second area is energy storage and services. This includes their QLR One battery platform. They have versions for space, defense, electric aviation. Plus, they do custom battery design, prototyping, and that really tough NASA standard testing.
So bespoke batteries, too.
And third, an interesting one they got through an acquisition, vibration reduction and robotics. They have this AI software called KULR Vibo. It cuts down vibrations and things that spin rotors, fans, etc. They claim it improves efficiency, extends life. Like, they quote a 23% increase in drone battery life.
Wow, 23% is significant.
Yeah, and this tech also goes into products like their Zero Vibe fan, aimed at AI data centers, and they've partnered with a company called German Bionic for robotic exoskeletons.
Okay, so they definitely have some incredible, pretty specialized technology, but you said they're small. What's their actual position in the market?
Yeah, here's the paradox. QLR is a microcap company. Market cap bouncing around 250, maybe $270 million.
Wow.
And they only have like 55, 62 employees. It's tiny.
Really small for that kind of tech.
Right. But despite that, look at their customer list. NASA, DoD, Lockheed Martin. Tier 1 clients. So you have this world-class, space-proven technology validated by the toughest customers imaginable, yet their annual revenues are only around $11 million.
That is a gap.
It's a huge commercialization gap. They're brilliant at creating these bespoke, high-performance solutions for the elite, but they seem to struggle translating that success into mass-market products that could drive exponential growth. And that struggle, I think, is a big driver behind this whole Bitcoin pivot.
That makes a lot of sense. So boiling it down, what's the core value proposition they're offering? What problem are they solving?
CLR's pitch is basically this. They want to enable a safer, more efficient, more sustainable global shift to an electrified economy. How? By solving these really critical challenges in thermal management and battery safety.
Okay. And what makes them different?
Their key differentiator is their proprietary carbon fiber technology. It offers apparently superior thermal conductivity, but in a really lightweight form. That's a big deal compared to traditional stuff like silicone or metal solutions, especially when weight matters. And a huge part of this is that unique NASA relationship. They have an exclusive license for battery safety tech, and they're the only commercial company with that NASA JSC 2793 certification for human spaceflight.
That NASA stamp is huge.
It's an unparalleled technical moat, yeah.
Okay, let's zoom out a bit. What industry trends are they writing or trying to read?
They're sitting right at the crossroads of several massive growth trends. You've got the global thermal management market projected to hit anywhere from, say, $27 billion up to $40 billion by the early 2030s. That's driven by things like AI, 5G, EVs.
All things generating heat.
Exactly.
Yeah.
Then there's the lithium-ion battery market itself, growing towards maybe $300 billion by 2032. And private space exploration, people are talking about that being a $1 trillion industry by 2030.
Those are enormous numbers. But again, for a small company like KULR, how do they actually tap into that, given those commercialization issues we discussed?
That's the million-dollar question, isn't it? Or maybe the $270 million question. Their challenge is bridging that gap. Moving from the niche, high-performance markets where their tech excels into the broader, volume-driven segments where cost becomes a much bigger factor. Their real addressable market isn't the whole pie. It's just the slice they can competitively serve at scale.
Right. And who are they competing against in that slice?
It's fragmented, but it's fierce. You've got industrial giants, think 3M, Honeywell, Henkel, and then lots of specialized tech firms too. KULR argues their carbon fiber stuff gives them an edge, especially for applications needing high energy density and minimal weight.
Any help from regulations?
Actually, yes. The regulatory environment is kind of a tailwind for them. Stricter rules globally about lithium-ion battery safety and transport. That directly boosts demand for advanced safety solutions like theirs. They've even gotten special permits from the U.S. Department of Transportation for their SafeX product line.
Okay. Are there big barriers to entry keeping competitors out?
Oh, absolutely, especially in aerospace and defense. Those certification processes, like that NASA one, incredibly demanding. KULR being uniquely certified is a big deal. Plus, you need long-standing relationships, a proven track record. It takes time. And their IP portfolio, those 7 patents, the exclusive NASA licenses, that's another pretty solid barrier.
So, summing up their competitive advantage, what really stands out?
Within their specific niche, their brand is incredibly strong. Why? Because of that direct NASA link. Tech used on the Mars rover, the ISS. You can't buy that kind of credibility. That space-proven story is a unique marketing asset.
But maybe not translating to big sales yet.
Right. They currently lack cost advantages because their manufacturing is small scale. However, for customers who do integrate their tech, switching costs are really high. If you design KULR's thermal solution into your satellite or EV battery pack, changing it means expensive re-engineering, retesting, requalification.
So it creates sticky customers.
Very sticky relationships, exactly. So their unique assets are really that IP, the NASA license, the patents, and their deep, deep expertise in designing for extreme operating environments.
Okay, we've got a good handle on the business, the tech, the market. Let's shift now and look at the people running the show. Who's in charge at KULR?
Chapter 2, Management Evaluation. All right, leading KULR is co-founder and CEO Michael Moe. His background is really interesting and I think key to understanding their strategy. He's got over 20 years in tech management, product development, but also experience as an early-stage venture investor. He's been involved in billion-dollar exits.
Ah, so a VC mindset too.
Exactly. That dual background suggests, a comfort level with high-risk, high-reward ventures,
Hmm.
and maybe an investor's focus on market narratives, telling a good story, which could perhaps explain the whole Bitcoin first pivot. It feels a bit like a VC move, leverage a hot trend to boost valuation, maybe faster than the slow grind of scaling a deep tech business.
Interesting angle, but they've hit some bumps in the road, haven't they? Operationally, credibility-wise.
They have, yeah. On the plus side, they sorted out some NYSE American listing compliance issues. That's good. They also cut their workforce by 15% in late 2023, aiming for operational break-even, so they are watching costs.
But there was more serious stuff.
Yes, more troubling. In June 2025, their stock got really volatile. There were reports of an investigation into potential revenue inflation, misrepresenting promotional materials. That kind of thing seriously hits credibility. And some people have questioned them calling SpaceX a partner when QR is basically just a customer using SpaceX launches.
Yeah, that doesn't sound great. So how are they actually spending their money, allocating capital with this dual strategy?
Well, historically, it was mainly R&D, buying IP, like that KULR Vibe acquisition,
Hmm.
but that's changed dramatically. Since late 2024, they announced this formal Bitcoin treasury strategy, committing up to 90% of their surplus cash to buying Bitcoin.
90% of surplus cash. Wow.
And they've gone for it aggressively. They grew their holdings from around 217 Bitcoin, worth about $20 million back then at the end of 2024, to over 1,000 Bitcoin valued at $101 million by July 2025.
Where's that money coming from?
Surplus cash, yes, but also an at-the-market equity program, an ATM program, which, importantly for investors, means they're issuing new shares and diluting existing shareholders to fund this. They even got a $20 million credit line from Coinbase specifically to, quote, turbocharge Bitcoin buying.
So using debt to buy more Bitcoin while also diluting shareholders, all while the core tech business isn't profitable. That sounds bold, high risk.
It's absolutely a high-risk strategy. And no, KULR doesn't pay a dividend, no plans to. They reinvest everything into growth and that Bitcoin strategy. No share buybacks either. Instead, it's consistent share issuance. Shares outstanding grew almost 63% in the past year alone.
63% dilution in a year.
Yeah. And then in June 2025, they did a 1-for-8 reverse stock split. The goal was to boost the share price, maybe attract more institutional investors, but reverse splits are often seen pretty skeptically by the market. All this, the dilution, the split, it shows how heavily they rely on tapping the capital markets.
What about returns on their investments, operationally speaking?
That's a really stark picture. Their return on invested capital, ROIC, is deeply negative, like somewhere between minus 26% and almost minus 80%.
Minus 80.
Yeah. It means their core operations are actually destroying value right now, not generating positive returns on the capital invested in the business. Any potential returns from the Bitcoin strategy are completely separate from, how efficiently the actual tech company is running. It really highlights the gamble.
Okay, let's dive into those financials in more detail then.
Chapter 3, Financial Analysis. First off, market cap, as we
Yeah.
said, around $266 million. That puts KULR firmly in the microcap category, which means higher volatility, higher risk, are just part of the deal for investors.
And revenue growth. You said it was inconsistent.
Very. Over 5 years, the compound annual growth rate looks strong, over 60%, but year to year, all over the place. They had that amazing 146% jump in 2023. Then growth slammed down to just over 9% in 2024, hitting $10.7 million for the year. Q1 2025 was better, $2.45 million, up 40% year over year. But that slowdown in annual growth in 24 is definitely a worry for a company whose value is based so much on future potential.
Okay. And profitability. Are they actually making money on any level?
No.
No.
Not really. It's pretty bleak across the board. Gross margin has bounced around a lot. It hit 64% in late 2024, which looked good, but then collapsed to just 8% in Q1 2025. They said that was due to unexpected labor hours.
8% gross margin, that's thin.
Very thin.
Yeah.
The trailing 12-month TTM gross margin is about 35%. But then look at operating margin, minus 175% TTM,
Yeah.
and net profit margin, minus 273% TTM.
Minus 273%. Wow.
Yeah. They have a consistent history of losses. Net loss was $17.5 million in 2024. And Q1 2025's net loss ballooned to almost $19 million. A big chunk of that Q1 loss, though, was a non-cash mark-to-market loss on their Bitcoin holdings when the price dipped.
So the Bitcoin strategy is already adding volatility to their bottom line, not just their balance sheet. What about cash flow? Are they burning through cash?
Consistently, yes. They've had negative free cash flow for the last 5 years straight. The TTM figure is a loss of over $24 million. So their operations just consume way more cash than they bring in, which means, yes, they constantly need external financing to keep going.
Which brings us back to the share issuance and the Bitcoin bet. It's all interconnected. Is there anything positive on the financial stability front, like their balance sheet?
Yes, actually. That's one area of strength. They have, as they say, virtually no debt. Debt-to-equity ratio is tiny, just 0.01, and they hold way more in cash and digital assets than their total debt. So that gives them a strong buffer, some flexibility.
Okay, so low debt is good.
And their short-term liquidity looks really strong, too. Current ratio is 9.19. That means they have plenty of liquid assets to cover their short-term bills.
All right, so given this picture of volatile growth, deep losses, but low debt and lots of Bitcoin, how on earth do you value KULR?
It's tough. Since earnings are consistently negative, the usual price-to-earnings, or PE ratio, is useless.
Yeah.
So you look at price-to-sales, PS, and KULR's TTM-PS ratio is exceptionally high, like 16 to 24 times sales.
16 to 24, how does that compare?
It's a huge premium. The average for the U.S. electrical industry is about 2.3 times sales. A peer average is around 1.9 times. So KULR is trading at, 8 to 12 times the multiple of its peers or industry. That tells you investors have baked in incredibly high expectations for future growth, expectations that just aren't reflected in the current numbers.
It screams speculation then. What about trying an intrinsic valuation, like a discounted cash flow, DCF? Is that even possible here?
You can try, but it's incredibly uncertain for a company like this. Pre-profitability, high growth, unpredictable strategy. Someone apparently ran an optimistic model that got a fair value near $100 a share. But that seems like a massive outlier.
Yeah, $100 sounds ambitious right now.
Extremely. A more grounded DCF would have to use multiple scenarios and to be super sensitive to your assumptions. What growth rate do you plug in? 30%? 80% initially? How quickly does it taper? And what discount rate, the WCC? Given they're a microcap, burning cash, highly volatile with this wild Bitcoin strategy, you'd need a very high discount rate, maybe 15 to 40% range. A base case might use 20-25%.
So huge uncertainty in the inputs.
Huge. And critically, any DCF valuation based on their operations would then need to have the current market value of their Bitcoin holdings added on top. So the final valuation is really this mix of two highly speculative things. The potential future value of their tech business, which hasn't proven it can scale profitably yet, and the future market value of their very volatile crypto portfolio.
Okay, let's transition them. How is the wider market actually viewing KULR? What's the sentiment out there?
Chapter 4, Market Sentiment. Right. So despite being a small company, a few financial analysts do cover KULR.
Yeah.
And their consensus rating, overwhelmingly positive, like strong buy or buy.
Right, strong buy.
Yeah. And the price targets are incredibly bullish. They range from about $10.80 up to almost $49 a share. Compared to the current price around $6.60, that suggests potential upside of several 100%, according to these analysts.
Wow, that's a big disconnect from the fundamentals we just discussed. How does news affect the stock? You mentioned volatility.
It's extremely sensitive to news, hugely volatile. Good news, like that $20 million Coinbase credit line, that triggered a single-day rally over 20%. But bad news, like the reverse stock split, or those reports about a potential revenue inflation investigation. Those caused dramatic price drops. The general media tone is pretty mixed. You get the positive company press releases, of course. But then some commentators are quite harsh, calling it an expensive one-stop hype shop, or just flat-out overvalued.
A real mix, then. What about short sellers? Are people betting against the stock?
Oh, yeah. Short interest is exceptionally high. Somewhere between 19 and maybe 21, 22% of the publicly available shares are being sold short. And that number's been going up.
20% short interest is huge.
It is. It means a big chunk of the market is actively betting the price will fall. So you've got this situation, super bullish analyst targets on one side, and really high short interest on the other. That makes KULR a classic battleground stock, and that fuels the volatility.
Creates a potential powder keg too, right? A short squeeze.
Exactly. That large short position means if some really good news hits and the price starts rising, those short sellers might be forced to buy back shares to cover their positions, which can drive the price up even faster. It's a possibility. Also, just technically speaking, the stock price, $6.61, is currently trading below both its 50-day $8.19 and 200-day $10.62 moving averages. And the 50-day crossed below the 200-day back in June. That's called a death cross, which technical analysts see as a long-term bearish signal.
So technicals look bearish, shorts are piled in, but analysts are bullish. A confusing picture. Who actually owns KULR shares?
Chapter 5. Ownership structure.
Blah.
Okay, let's look at who holds the stock. Institutional ownership is pretty low, somewhere between 8% and maybe 21%, depending on the source. About 102 institutions hold around 28 million shares.
Who are the big holders?
Well, the biggest names are the usual index fund managers, like Vanguard and BlackRock. But their positions are mostly passive, just tracking indexes. Interestingly, though, there's been a noticeable uptick in interest from hedge funds. Names like Millennium Management, Marshall Wace, SquarePoint OPS, that suggest growing speculative interest from sophisticated players.
What about insiders, management, founders?
Insider ownership is significant. Between 7.5 and maybe 17%, CEO Michael Moe holds about 7% himself. Looking at recent trades, there's been more insider selling than buying over the past year. The president COO and the CTO were selling shares back in 2024.
Any buying from the CEO?
CEO Moe's last open market purchase was way back in September 2023. His most recent transaction was actually a sale in May 2025, but that was noted as being to cover tax obligations.
Okay, so institutions are low, some hedge funds moving in, insiders mostly selling. Who owns the rest?
It's highly diffuse. The general public retail investors holds the vast majority, maybe around 84% of the shares. The top 25 largest shareholders combined own just under 21%.
What does that diffuse ownership mean for the stock?
It generally contributes to higher volatility. When there isn't a large block of shares held by concentrated long-term institutions, the price can be heavily swayed by retail investor sentiment and trading activity.
Makes sense. Okay, let's try and wrap our arms around all this with a SWOT analysis. Strengths, weaknesses, opportunities, and threats for KULR.
Chapter 6. Risk Assessment. Sounds good. Let's start with the strengths.
Proprietary technology. That patented carbon fiber tech validated by NASA for extreme conditions. That's a huge strength.
Elite brand credibility. That direct NASA association gives them an unmatched technical reputation and moat.
Strong balance sheet. Despite the cash burn, they have significant cash and digital assets, plus minimal debt. That provides financial flexibility.
Tier 1 customer base. Having Lockheed Martin and other major players as customers validates their tech at the highest level.
Okay, those are compelling strengths. Now for the flip side, the weaknesses.
Right. Lack of profitability. They are chronically unprofitable. High operational cash burn means they constantly need external funding. That's a major weakness.
Ambiguous corporate strategy. This aggressive Bitcoin-first pivot creates a really high-risk dual strategy. Does it divert resources and focus from the core tech business? Probably.
Commercialization challenges. We keep coming back to this. Despite the amazing tech, they've clearly struggled to scale the core business for mass market growth.
Shareholder dilution. Their heavy reliance on those ATM offerings means they're frequently issuing new shares, significantly diluting existing shareholders.
Okay, clear weaknesses. What about the opportunities ahead for KULR?
A key are growth markets. Their tech targets absolutely massive growing sectors: EVs, energy storage, AI data centers, 5G, private space. Huge potential there.
Favorable regulatory trends. That global push for stricter battery safety rules, that directly increases demand for what KULR offers. It's a tailwind.
Digital asset upside. If crypto markets go strongly bullish, that large and growing Bitcoin treasury could appreciate significantly in value. It's a potential windfall.
Expansion into new verticals. Those partnerships, like with German Bionic for robotics, offer a way to enter new growth markets, maybe more capital efficiently, without massive internal R&D spend.
And finally, the potential storms on the horizon, the threats.
T1. Intense competition. They're up against giants like 3M and Honeywell, plus nimble specialized firms. It's a tough landscape.
Technological obsolescence, battery tech, thermal management. These fields move fast. A breakthrough elsewhere, like maybe practical solid-state batteries, could make KULR's current solutions less relevant.
Cryptocurrency volatility. This is a big one. That heavy Bitcoin investment exposes them to extreme price swings and also the uncertain regulatory future of digital assets.
Supply chain vulnerability. Like many tech companies, they're exposed to disruptions and price swings for critical raw materials.
Any broader economic or geopolitical threats?
Absolutely. Macroeconomic factors like persistent inflation could keep driving up their costs for materials and skilled labor, squeezing margins further. Higher interest rates make raising that crucial capital more expensive and could also dampen customer spending. And geopolitically, yeah, things like the reintroduction of U.S. tariffs in 2025, 25% on some chips, even higher on certain Chinese goods that could really increase KULR's cost of goods sold and hurt their competitiveness.
Okay, that's a comprehensive SWOT. So after this entire deep dive, let's try to synthesize what's the bull case versus the bear case for KULR right now.
Chapter 7. Conclusion. All right, let's boil it down. The bull case. The bulls are betting on the undeniable quality, the NASA validation of that proprietary carbon fiber tech. They see a strong technical moat in valuable sectors like aerospace and defense. They see QLR targeting multiple massive growth industries. They like the strong balance sheet, lots of cash and Bitcoin, little debt giving them runway. The hope is that management can finally crack that commercialization gap, get into the mass market, or that the big Bitcoin bet pays off handsomely. If either happens, the bulls argue, the upside could be immense, just like those bullish analyst targets suggest.
Okay, that's the optimistic view. What about the bear case?
The bears see KLR as a highly speculative, cash-burning venture that hasn't proven it can be profitable. They point to the inconsistent revenue growth, the history of losses, and especially the significant shareholder dilution. They view the Bitcoin-first strategy not as bold, but as a high-risk gamble that distracts from the core business. They look at that extremely high price-to-sales ratio and say the valuation is completely detached from fundamentals. The high short interest reflects this deep skepticism. And recent events, like the reverse split and that investigation probe, they just add to the bearish concerns about strategy and credibility.
It really does sound like a company pulling in two very different directions, making valuation incredibly tricky.
Exceptionally difficult, yeah. A precise intrinsic value. Very hard to pin down because they're pre-profitability and have this dual nature. Any DCF model is just riddled with aggressive assumptions about future growth and profits that simply haven't materialized yet. So the valuation is this weird composite. The potential future value of a tech business that might take off, plus the future market value of a highly volatile crypto stash.
So wrapping it all up, what's the concluding outlook for KULR Technology Group as we see it now, mid-2025?
At its current share price, around $6.61, KULR Technology Group is really the definition of a high-risk, high-reward proposition. The current valuation just isn't supported by the financial fundamentals we've seen historically or currently. Investing in QLR today is basically a speculative bet. You're betting on one of a few outcomes. Maybe a future tech breakthrough leads to sudden, rapid commercial success. Maybe their big Bitcoin gamble pays off massively in a bull run, or maybe some combination of both. The stark disagreement between those bullish analysts and the heavily shorted bears perfectly highlights the extreme uncertainty here. Anyone looking at the stock should expect continued, significant volatility as the market tries to figure out if KULR is a hidden gem, a future tech leader, or just a speculative venture that won't live up to its ambitious promises.
That was a truly fascinating deep dive into KULR Technology Group. What a ride. Innovation, huge pivots, market battles. It really makes you think about the pressures on companies trying to operate right at the cutting edge, both technologically and financially.
Absolutely. And it leaves you, the listener, with a really interesting question to ponder. In this world where we see both incredible deep tech advances and these super volatile digital assets grabbing headlines, how do we, as individuals trying to be informed, weigh that proven innovation track record against the undeniable allure and risk of these big speculative bets?
A great question to think about. And with that, we wrap up this deep dive. Please do remember to like and subscribe to the Stock Analytics AI YouTube channel. Our members, $4.99 a month, get priority access to deep dives, including our upcoming coverage of the entire S&P 500.
And if you want a specific ticker covered just for you, drop us a super thanks on YouTube. Also, please remember, this analysis was generated by an AI system. It's for educational purposes only. It is definitely not financial advice.
That's right. Please do your own research, or better yet, consult with a qualified financial advisor before making any investment decisions.